This here is the daily chart of the euro dollar. And this here is the euro dollar with all of the psychological price levels placed on it. Any questions? I got a few. Welcome to the price levels video, traders. This is one of the Dirty Dozen. It's a video I made a while back. It's one of my favorite videos that I've ever made, and I hope that you've already seen it. But maybe you haven't, so let me catch you up real quick. If you're visiting this channel for the first time, you really need to watch these two videos before you watch the rest of this one, because it's just going to make a lot more sense. And these are great videos too. The Big Banks video is the seminal video of this channel. I mean, if you've seen it, you know. If you haven't, you don't. Once you see it, you cannot unsee it. You are at a gigantic advantage if you have spent the 30 minutes to go watch that video, and you're at a huge disadvantage and you're constantly behind the 8 ball if you have not seen it. You must understand why price goes up and down, who makes price go up and down, and the methods and the reasons for why they do it. And that's what that Big Banks video covers. And then the Dirty Dozen video, which I've already mentioned, is a great video to see where my head is at. I don't like any of the Forex tools that most people use, and I have really good reasons for that. And that video explains it pretty well. Price levels is a part of that video. I spend just a little bit of time talking about it. And towards the end, you know, you're going to disagree with me at first when you first watch it, but I hope that after that video is done, I've kind of gotten you on my side a little bit, because I even said in that video too, I'm going to take every single concept I talk about and make an individual video about it. So if you still disagree with me on a Forex tool that you love to use, I will make an individual video on it, and then towards the very end, you can decide for yourself whether you want to still use that tool or not. But I would hate for you to come and find this channel, which is a great move on your part. You're going to love what you see. But I don't want you to be shortchanged because you don't quite understand where I'm coming from. So pause. I'm going to link these two videos down below in the description, and go watch those first. You will not regret it. But for the rest of you, let's go ahead and move forward. So there are a few things to understand when it comes to price levels. I don't mean the levels you'll find on a support and resistance line or a pivot point or anywhere else. These are known as psychological levels, and I don't know why they're really called. I mean, I kind of do, but there's really no good reason why. It's just referred to as psychological levels. That's what this video is going to be about, and you're going to see what those levels are really soon. And there's no consistency across the board on this. So if you ask somebody who actually studies these, you know, what are the psychological levels, you're going to get different answers from different people. And when you factor all these things in, it's just part of the reason why these levels really don't work, and they're really not very usable. So let's first talk about why they are called psychological levels, okay? It's a powerful word. It's like when people say volatile currency pairs. It scares tons of people off of those currency pairs, which are actually really good pairs to trade. And we're seeing this again, psychological levels. Well, that must be pretty powerful, right? Well, not really. And I'm going to show you soon that there's really nothing special about these levels. So what are they exactly? It all depends on who you ask. But most people will say that anytime a currency pair ends in 00, it's also known as the big figure. You can find a bunch of blogs and stuff online talking about trading the big figure. Now you can see 00 a couple different ways, because yen pairs only go to 2 digits beyond the decimal point. So if it's, you know, the dollar yen is 113.00, that's a big figure. To where in, let's say, the euro dollar, and really most any other pair you're going to trade that's not a yen pair, it's the last 2 digits, even though there are 4 digits to the right of the decimal. So $1.15.00, for example, that's a level we're pretty close to right now on the euro dollar. And that is also known as the big figure. And a lot of people will also tell you that if it ends in 50, that mid figure, that's apparently a big deal for some reason. I still really don't understand why, but there it is. And then you'll also hear of bank numbers. People think the big banks love to use the 80 and the 20 figure, anything that ends in an 80 or a 20. And I heard this first by one of my early mentors, ICT, who I've talked about before, and I never forgot it. And I saw it a few more times down the road. You always remember when you hear things like this. And yeah, so I've heard the big figure, mid figure, and the 80-20 all thrown around. You're going to see the big figure and the mid figure more. But I went ahead early on in the very first part of this video and put every one of those figures up on the chart, and you saw how ridiculous it was. I mean, even if you're trading lower time frames, you simply can't trade that way. So conventional wisdom and Forex blogs and Forex Twitter will all have you believe that these numbers are of some significance. And I'm here to tell you that they are not. Let me tell you what actually happens here. And you would have had to see the Big Banks video to understand this. So these levels, because they're called psychological levels and because all the sheep traders pay attention to it, they're going to have more trading going on, whether somebody is using this line as a breakout point or somebody is trying to call a reversal at these psychological levels. And when an abnormal amount of traders are making trades at a certain point, this creates hot spots on a chart. Big banks see this, and then they adjust accordingly. So they have a decision to make at this point. Let's just say, let's go back to that 115.00, the big figure on the euro dollar. Once price starts to approach that level, you will see a higher than normal amount of traders enter the game. The big banks see it, and then they have a decision to make. They ask themselves, okay, is this action here enough to tilt the balance of where most of the dumb money is going from long to short or from short to long? If it is, then we need to start manipulating price some. We need to start knocking out stop losses. We need to plan our next move in terms of which way we're going to take this thing. But far more often than not, and here's the thing, guys, they don't do anything. These psychological price levels that everybody wants you to pay attention to, usually absolutely nothing happens on these levels. Usually price just completely ignores it. So let's go back to that chart that I showed you at the very beginning, and I'll show you what I'm talking about. So here we are back at the euro dollar daily chart, and I have all the way from, let's see, $13.20 all the way up to, we got $1.19. I have every big figure, mid figure, 80 and 20 labeled. The 80 and 20 are the purple, and the big figure and mid figure are the yellow. Pretty obnoxious, right? A lot of lines. So let me just go ahead, just for the sake of argument, and take the 80 and the 20s off. Let's take all the purple lines off the chart, and then we'll just work with anything that ends in a 00 or a 50, because those are the ones you're going to see mentioned more than the other ones. So let's just do that now. And there you have it. And yes, I did take a break in between shooting this video, so price has moved a bit in the last, I don't know, that's 6-7 hours. Price has moved up a little bit, but really doesn't matter where it is right now. Let's look at the past. Let's look to the left of where price is right now and see how many times price really respected any of these lines. All right. So how do we want to do this? Let's take a top-down approach. Let's start with the $1.19. No respect whatsoever back here. Let's see if we go further back. Anything? Nope. Just a really insignificant price level. So let's just get rid of that. That line was totally worthless. 118.5. One time. And yeah. Nothing there, hit it one time and never ever came back. So call that what you will. $1.18, let's see, some action going on there. Okay, price did not care about it here. Price, look, maybe you wanted to make a reversal trade right here at $1.18. If you did, the banks do what they almost always do. They notice people wanting to go short and make a reversal at $1.18. So what they're going to do is they're going to see a bunch of stop losses that are sitting right around here, and before they decide to go short, they're going to knock them out. And that's exactly what happened here. Right before this big candle down, they said, okay, it is about time that we started moving price short. But we're going to get ours first. because we're going to have a lot of people that have stop losses sitting right up here, and we're going to make sure we knock them out so those traders don't get the win. We take their money, they don't take ours. And so that's what happened right here. And didn't quite get there here, and then a similar thing happened here. They didn't go too far up, but it did knock a few stop losses out with that little candle before it went down again. So I would say $1.18 was a pretty solid price level, but there was still a lot of big banks manipulation going on right around that level. So I'm going to go ahead and keep that one up. That was actually pretty solid. Going down here, $1.17.5. Nobody cares. Nobody cares. Price just went right through it anytime it wanted to. You see a little bit of bounce here in consolidation, but price had already disrespected it so many times before any of this was even happening, and then it just disrespected it again. So you can't really count that as anything. So off it goes. $1.17, please. The euro dollar doesn't even care about that level. Look, a whole lot of just not even caring about the $1.17 figure. We're going to take that off. $1.16.5, same thing. It never bounced off of it at any real point. Maybe here. 1 out of what? 12 times? Worthless. Goodbye. $1.16. Again, nothing. No price bouncing off of it. $1.15.5. Okay, a little bit here. But again, at no time did it just clearly bounce right off of it. For all you reversal traders out here that also want to use price levels, 2 wrongs certainly don't make a right. You are getting beat up a lot. And depending on where you have your stop loss, the banks are punishing you with these little moves down before it goes up. Do you see what I mean? Here, 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 here. The moves are there, but it's pretty rough going. And then right here, it just plowed right through it. Now we're back again. So I'll leave that one up, but kind of with a caveat, because you didn't get any real pure bounces. You got some moves, but you got a lot of bank manipulation too. But I will leave that one up. Because in all honesty, you probably had your stop loss further than this, but a lot of traders just don't do that. A lot of traders, like we mentioned before, don't trade the daily chart. So the smaller time frame traders were getting their stop losses blown out every time the banks wanted to take this thing long. Daily traders, because we're smarter than the small time chart traders, that probably didn't happen. We probably had our stop losses further down. So you might have been able to get some reversal trades here. Even though, as you guys all know, I don't recommend you do that. But just for the sake of argument, we will say that the $1.15.5 price level actually had some value to it. Moving down to $1.15. A whole lot of nothing. It didn't quite get there here, didn't quite get there here. Price didn't care. Price plowed right through it, and price plowed through it again. Yeah, completely insignificant. This one will have to go. $1.14.5. Nobody cares here. Nobody cares here. Now, if let's just say this is all you saw. Why doesn't it let me do that? Nope. I know why. Didn't hit the button all the way. Let's say you pay attention to the mid figure, $1.14.5, and this is what you saw. Price not giving a shit and then not giving a shit again. Would you even have this line on your radar? I wouldn't. Price has already shown me twice that this line is worthless. So by the time it did come back down and do a little bounce off of it, I really wasn't paying attention to it. It no longer factored in. So yes, price bounced off of it, but over here, it disrespected it twice. So I don't think anybody out there would have the presence of mind to have this up on their chart. So for that reason, even though you did get that little bounce, I'm going to take it off. All right, $1.14, nothing. Plowed right through it, plowed right through it. Gone. So guys, just so you know, we're looking for lines that price actually respected. It would get to that level and then bounce off it in some way. All right, and we've only so far, out of all the lines I put up, found 2 that you could actually say that about. The rest of the lines were completely useless. And honestly, this one is too. Price went pretty far beyond 113.5. So we're going to take that off. Now look at this big move here too. I didn't even bother putting any lines from $1.19 on up because it wouldn't have mattered. Price just acted like they weren't even there and just ran right through it. So out of all those lines, you had two actual, I'm doing air quotes, psychological levels that price even kind of sort of respected. All right? That's how worthless these things are. I'm not cherry picking charts. I'm going to the most traded currency pair on the planet, putting all of the big figures and all of the mid figures up and showing you how seldom price even recognizes those levels. But believe me, Forex Twitter was really quick to point out how well the $1.18 psychological level worked. Completely ignored all the other ones, but you can bet on Forex websites and on Forex Twitter, this $1.18 got some play. Because the rare times these things do work, people are so quick to use it as an example, and they will always ignore all of the times where they didn't work at all. All right, so what's our plan of action here? Well, when it comes to price levels and psychological levels, just do this instead. Ignore them all completely. Act like they're not even there. That's what I do, and I'm way better for it. And so what do you do as far as getting into a trade and getting out of a trade? Well, you know my answer. You use indicators. That's the best tools you can possibly find. When you find a good one, and a lot of you have already found a good one, there is nothing better, and it completely ignores any kind of price level on an actual chart because we have seen how well they work. How many lines did I keep up on the chart? 2? How many did I take off? 9 or 10? And if I would have kept going even higher with those lines, I would have taken every single one of them off because not one of them was a level that ever meant anything. But you better believe that any time price was approaching any number that ended in 00, Forex Twitter had something to say about it, and they would have led you astray almost every single time. So what you need to do right now is go into your Twitter and unfollow anybody who has ever mentioned a price level at any point in time. They clearly, and I just showed you this, do not have your best interest in mind. You shouldn't even be looking at these levels. They are gigantic failures the vast majority of the time, and anybody who is touting them, anybody who is even telling you to look at them, is clearly taking you down the wrong path. And now look, I'm not saying they're doing it on purpose. They have a job to do. They're doing their job. But your hard-earned money is on the line here, and you just cannot afford to follow anybody that thinks these things are worth anything, because they're not. So while the world is telling you to pay attention to these things, I am the one guy that is telling you not to and proving to you that they don't work at all. And that is exactly the problem with Forex YouTube and Forex Twitter and Forex websites right now. There are no naysayers when it comes to really popular tools that clearly don't work at all. You wonder why that 99% I talk about is so high. People just get the wrong information over and over again, and there's not one person out there telling you that it's not good. There's not one person out there that is telling you and then showing you that these tools are the reason why you're not getting ahead. You need this channel. If you haven't already, subscribe, hit the bell so you don't miss anything. Binge out on these videos so you can get your head right and then get ready for more, because I got a lot more coming. All right, guys? Let's go get it.